Welcome to the Finance Report. Hi, I'm David Wogenson. Over the next half hour, we'll be breaking down the keys to having a successful retirement. This will include taxes, income, protection, and so much more. Joining us now are Mark Dillon and David Linsky. The father-son team are with L3 Family Wealth Partners, a West Palm firm that focuses on preparing people for a successful retirement. They're also popular radio show hosts. Gentlemen, great to see you all. Mark, let's start with you.
Sure.
We're going after taxes right now. What do you believe the future of taxes looks like for retirees?
Well, it's not even what we believe, it's what we know.
Okay.
Key provisions for all taxpayers are expected to expire in 2025. That's not just for the 1%, that's for everybody. So for example, if you are a retired person in the 12% tax bracket, you could expect somewhere around a 25% increase over the next couple of years.
Yeah, that's huge. That means more money out of your pockets. Now, you just said in 2025. So, gentlemen, that means the clock is certainly ticking. Are there ways to lessen our tax liability in retirement?
Oh, absolutely. When we boil it down, there are two main strategies we can take.
Okay.
First one, have a proper tax plan, which can keep hundreds of thousands of dollars over your retirement in your pocket so you can spend it and enjoy it. Second option, go to Uncle Sam's plan.
Right?
Does that sound pretty good?
I think Uncle Sam's going to take as much of your money as he wants to give you right there. So there's the difference right there, right? We are talking about the potential, Dillon, to keep hundreds of thousands of dollars or giving it away.
Absolutely. We are talking about potentially hundreds of thousands of dollars over someone's retirement. And I can't tell you, David, how often people come to our office for the first time without a proper tax management plan. The time to start planning is now.
Mark, if taxes are such a big deal, as Dillon just stated, there's people that are overlooking and don't have it part of their plan. How on earth can something like this happen when taxes are so critical?
It's unbelievable. One of the top priorities of our firm is to have our clients' tax liability go as low as possible.
Sure.
Of course, legally and safely.
Yeah.
But the thing about it is that you have to determine what kind of income is the client actually generating. Is it taxable income or is it tax-free income? And more importantly, how is the money coming out of the accounts and how's it taxed at that point?
Yeah, and remember, every time you take money out of your 401k or your IRA, Caesar wants to get paid.
Absolutely.
He certainly does. Well, why do you think then so many retirees overlook this? Is it on them? Is it on their financial planner? Where can we put blame? I hate to point the finger right now, but we need to point the finger at somebody right now if it's so critical yet being ignored, overlooked, and in fact, if retirees are uneducated.
Yeah, so it comes down to if they don't know what to ask, they're not going to be able to ask it. So the advisor has to take the initiative and tell the client what they should be doing in terms of their tax planning when they get to retirement.
Yeah, you certainly don't want to overlook it. So you mentioned potential tax increases, how they could increase on us in retirement. Are there strategies to protect our retirements from potential tax increases?
Absolutely, and it all starts with a comprehensive financial retirement plan. And inside that retirement plan, there's specific sections, and the one that we focus on most, except for income planning, is tax planning. When you start from that and you build your base, you should be fine.
Okay, from a lifestyle standpoint, gentlemen, what can retirement potentially look like when we have a proper tax management strategy in place?
You can live the retirement that you want to live. Every dollar that goes to your income taxes, that means that dollar is not being used for your own personal retirement. So it's going to improve it greatly.
Yeah, and we see a lot of our clients telling us their main concern is making sure they can sustain their standard of living in retirement.
Yeah, absolutely, very important. Great start to the show, very important information, gentlemen, thank you. So for you at home, if you want to learn more about having the right tax plan for your retirement, L3 Family Wealth Partners has a great offer. Right now, for the first 5 callers with a portfolio of $500,000 or greater, they're offering a complimentary full-blown retirement plan just for you. This will allow their team to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call, 561-933-6877. That's 561-933-6877. Tax is obviously such a big focus for retirement, but so is protecting your money. Mark, what do you think the pulse is right now for retirees given all the market volatility that's taking place?
I think people are worried. And they really have every reason to be. I mean, think about what's on the news every day, right? You have recession, and you have market volatility, and you have student loan situations now. Now they're talking higher interest rates and inflation. I mean, it's confusing and it's concerning. But I'll tell you something. What we find is what really calms people down when they know that they have a well-structured, comprehensive financial plan that they can depend on, and they know that they have advisors that are going to monitor that plan, and if things do get a little crazy, we can adjust accordingly. That gives people peace of mind.
Yeah, I want to dive more into that in just a moment, but first, this bull market run, it went on for a decade plus. Should we be surprised? Why are retirees surprised that it's over?
Well, listen, it's been an unbelievable run, and many people in our generations have only seen a bull market, including us.
Yeah.
But something that we've learned when looking back at history, and something that our dads always taught us, is that winter always follows summer. And in times like these, especially for retirees, you have to know when it's time to take some chips off the table and reallocate them into more conservative programs focused on guaranteed cash flow and preservation of principal.
But when we talked about protecting our money, David, does this mean we're just stashing it under our mattress?
Our grandfather used to tell us something. He said if you took a $100 bill, put it in a shoebox, shove that shoebox in the freezer, came back 10 years from now, that $100 is going to be worth less than it was today. There's something called opportunity risk and market risk with that money.
Okay.
There's really only two ways to protect your money if you think about it. You can either protect your income stream, or the amount of income that you generate on a monthly basis, or you can protect your principal from market fluctuation. The beautiful part about today is that there's products out there that do both.
Okay.
And as long as the companies that do this are strong, secure, and solid, we feel very comfortable showing them to our clients.
Let's paint a picture for our viewers at home. What can a big loss look like for someone that is in or nearing retirement?
It can be devastating because when you think about it, if your future income stream is going to be dependent on your retirement assets, what's going to happen if your retirement assets start to go down?
Pulling from that.
That income is going to start to go down.
Okay, so devil's advocate. Dylan, I want to ask you this. If I pull my money out of the market, then I am forfeiting growth. Is that the case?
Well, David, let me answer that question in two ways. First, our plans don't just include one investment type.
Okay.
They're diversified to still have some exposure to the market. And second, and the real beautiful thing about the programs that we show our clients is that when there's growth in the market, that has a direct positive impact on the amount of monthly cash flow you should expect. Think of it like in years where the market does well, you're giving yourself a raise.
Okay, sign me up for that.
Big no.
Big no, yeah, big no right there. How often is there that misconception though, Mark, that if I protect my money, I have to forfeit the growth? Why is it that protected growth can coexist?
Listen, growth is important because we have to combat inflation.
Okay.
The key to successful growth is managing the downside when the market's going down. We want to make sure that our clients don't get killed.
Yeah, absolutely.
So there's programs out there today that are designed just to make sure that when the markets go down, the clients are still going to be okay with their original investments. They might protect 10%, 20%. They could protect 100% of the downside and still have the potential to participate on the upside when the markets turn around.
Yeah, you're absolutely looking for the opportunities. David, how can income planning potentially impact our market dependence?
Well, it all comes back to the individual client because no two people are going to be the exact same when it comes to their income needs and the expenses that they have. So depending on their expenses, we need to plan more properly for their income.
Plus the fact that the more income you're generating, the less risk you have to take in the market.
No, absolutely. Strong start to the show, strong information, plenty more to come. But first, if you want to learn more about having a protected growth strategy for your retirement, L3 Family Wealth Partners has a great offer for you. Right now, for the first 5 callers with a portfolio of $500,000 or more, they're offering a complimentary full-blown retirement plan just for you. This will allow their team to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call, 561-933-6877. That's 561-933-6877. So that brings us to 15 and 15, 15 topics in 15 seconds. Gentlemen, are you ready to go on the clock?
Let's do it.
All right, we're going to fire it up. Question number one, Mark, it's coming to you. How much money will you need to retire? According to a survey, more Americans than ever believe the magic number is $1 million. So, Mark, is $1 million the real magic number?
I don't believe in a magic number.
Okay.
In fact, magic by definition is illusion.
Okay, yeah.
Our clients are unique and different, every single one of them. But I will tell you, we've seen a major shift in focus from net worth or the magic number to more of a focus on guaranteed income for life. People just want to maintain their standard of living in retirement. That's really what it's all about.
All right, so you heard it here first. Do not chase that magic number. Question number two, it's understandable to have some concerns, perhaps even some fears, when it comes to using our savings in retirement. So, Dylan, what can be done to spend with confidence?
Well, someone's confidence in spending while they're working is directly related to the certainty of their paycheck,
Okay.
based on their employer's strength and job security. And it's no different in retirement. A client can feel confident spending in retirement if they know they're going to have that consistent source of income every single month.
Yeah, very powerful answer. Question number three, what if I told you 45% of people who do not have an advisor believe the typical cost for one is between 5 and 15% of their assets? So, David, is 5 or 15% a nice number?
Did you say 5 to 15%?
That's what I did say.
Well, what we see is our fees hover around 1%.
Wow.
The issue is when someone comes into our office, the retirement plan consists mostly of mutual funds, and they don't understand the true fees inside them. They're inside that prospectus, it's about that thick,
Yeah.
so they just don't understand what they actually are.
Okay, so if someone's paying 5 to 15%, your advice is to
Come talk to us for sure.
come talk to you.
Absolutely.
Run from the other. Run. Any direction you want to go. Question number four. I found a survey that found over 30% of every dollar a retiree spends could go to pay taxes. Mark, are we really looking at nearly a third of our money going to Uncle Sam?
Actually, it could be more than that.
More?
More than that.
Wow.
The key is to really focus on the tax portion of your retirement plan. That's what's going to bring it home. Look, at the end of the day, you have a choice. You could either create your own tax plan with your advisor, or you can use Uncle Sam's. Now, you tell me, Dave, where's the client going to benefit more from?
Look, we talked about it at the top of the show. You can go his route, you can go your route. Having a proper tax plan could save you up to hundreds of thousands of dollars in retirement. I don't know about y'all, but that's the plan that I would like. Question number five, when it comes to income taxes, is it possible, Dylan, to receive retirement income from our life savings without having to pay income taxes?
So that depends on the individual client and the type of assets that's generating the income. So I would say that people who have a proper tax management plan, like you just said, can save up to hundreds of thousands of dollars over the course of their retirement. That's more money for them to spend on themselves, their loved ones, and their family.
Yeah, you absolutely want to keep more of that money in your pocket. Solid answer. Question number six. Obviously, as we approach retirement, our thinking, it can change. So, David, is it more important to focus on growth or to avoid big losses?
Well, especially for those in retirement or approaching retirement, it's scary to think about having a big loss. We think about we don't have enough time to make up those losses. So we see a shift on wanting to guarantee our income. It's not just about the return on your money, it's about the return of your money when you get to retirement.
Yeah, and for you at home, if you're just watching and tuning in right now, we talked about protected growth. Protection, growth, they can coexist and make a huge difference for your retirement. Mark, back to you. Who doesn't love guaranteed money? Annuities are an investment that can do that for your income. But why do you think so many people are hesitant to get one?
I think people are confused because there's so many different kinds of annuities in the marketplace. People don't understand them. I'll give you a quick example. A variable annuity.
Yeah.
What is that? It varies. It goes up and down, and it comes with it a really high fee structure. Now, on the other hand, you can look at what they call a fixed indexed annuity, which has either a low to no fee structure, which is really nice, protects the principal, participates with the market growth, and can be converted into an income stream for the client's life and the life of the client's spouse. On top of that, what I think is really cool is they come with a beneficiary designation, so it skips probate. Now, David, I'm not saying that it's the be-all for end-all, but it's a wonderful way to build a foundation in your retirement plan.
Look, I love the passionate answer right here. This segment is called 15 in 15, and you went like 45 seconds on that right there. It was a lot of information.
That's pretty common.
It's pretty common, so maybe this segment isn't for you, but you guys have nailed the first half of it. We're pausing the clock right now. More great information to come. But first, today exclusively for our Finance Report viewers, L3 Family Wealth Partners has a great offer for you. Right now, for the first 5 callers with a portfolio of $500,000 or greater, they're offering a complimentary, full-blown retirement plan just for you. This will allow their team to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call, 561-933-6877. That's 561-933-6877. Back on the clock we go. Topic number 8 of 15 in 15. We've worked decades to get to retirement. We want to travel, see the world, spoil the grandkids. So Dylan, what do we need to do in order to maximize our lifestyle goals?
Well, David, it's simple. If you want to maximize your lifestyle in retirement, you just need to have enough money or cash flow to do all the things that you want to do. We encourage all of our clients to make a bucket list with a budget, and then we plan accordingly. And then that bucket list becomes part of the plan.
Absolutely, because again, you've worked decades to get here. You want to enjoy your lifestyle. Question number 9, David, coming to you. Fees. I've heard them compared to termites just eating away at your portfolio. What can realistically happen to someone's savings if they aren't tuned into those fees?
It's a great question. So I'm going to take a page out my dad's playbook and take about 30 seconds for this one.
Okay, that's fine. Hey.
You believe this?
It all comes back to the old expression. Price without value, not worth it.
Okay.
When you have the value, you understand why you're paying the fee. The issue comes when a lot of clients come to us, they don't understand the fees they're paying because a lot of these investment companies hide those fees like we talked about earlier in that thick prospectus.
Absolutely.
We believe in 100% transparency. Our clients know any fee that they're paying if there is a fee because we'll recommend products if it makes sense for them that have no fee at all.
All right, solid answer. I wasn't counting there, but it does seem like he went over 30 seconds, correct?
Come on,
right there, you on the watch right
15
there.
to 15.
He borrowed more time right there. Question number 10, Mark, coming to you. 401ks, lots of people have them. Lots of people rely on them for income in retirement. But how common is it for parts of someone's 401k to be underperforming?
Well, it's more common than you think, and the reason being is quite simple. When people make those decisions, what kind of investments to choose, what asset allocations to be in, they don't have a financial advisor giving them that type of guidance. It's usually the actual employee that is picking those investments for themselves. So what we always recommend is if when you're getting ready to retire, bring that 401k program into the office. Let a skilled financial advisor look at it first, hopefully a certified financial planner, and make sure that you're positioned properly so when you do retire, those assets are going to be there for you.
Gotcha on that. So far, you're the only one not to go over 15 seconds on this. These guys are stealing your time right now. We got to make sure Dylan gets more face
15
time.
in a minute and a half.
Here we go. Question number 11. Once upon a time, pensions were standard. You collected Social Security, and a few mutual funds carried you off to retirement. But Dylan, how have the rules to retirement planning changed?
Well, most people are still entitled to Social Security, but we can't say the same for pensions anymore. That's why it's so critical for people to create their own pensions to generate another source of income from their savings to help sustain their retirement. As long as you have enough income coming in to cover food, clothing, shelter, healthcare, the major things, then we can really focus on enjoying the real pleasures of retirement.
All right, question number 12. We discussed that really being ready for retirement is both a mental and a financial question. So David, how often are people really ready to retire?
We know someone's ready to retire when they're coming into our office and they're saying, I want to retire tomorrow, the next 5 hours, or even yesterday.
Okay.
Not so much as the guy telling us 6 months, a year, or a few years down the road. When it comes to the financial part, it's a lot easier actually. It's just the math. We use our comprehensive financial planning tools to show them if they're actually ready to retire.
Yeah, absolutely. Get a plan on paper and it might just tell you the answer. Question number 13. There are always going to be strategies that people can use to plan for retirement. Lots of advisors well, even lots of different things. So, Mark, do you believe buy and hold is still a relevant strategy?
I do. Listen, I'm old school, of course, you can tell. But I do believe in a buy and hold strategy for the portion of your retirement plan that's earmarked for equities or stocks. As long as it's big, blue chip, dividend producing, and have solid, strong track records, we're very comfortable with the buy and hold strategy.
All right, question number 14. Dylan, long-term care, it could be a retiree's largest expense. So what can people do to afford it without having to pay for some huge insurance policy?
Well, let me tell you, the long-term care options today aren't your parents' long-term care options. There are exciting, new, and innovative long-term care options that are different than traditional long-term care. You would hear about traditional long-term care, the premium could increase every single year, and by the time you actually needed the benefit, you couldn't afford the premium.
Wow.
Yeah, now the premiums are fixed, the benefits are plenty, and they come with a beneficiary designation. So in the event that you don't use the benefit, it's passed down to your loved ones, not the insurance company.
Yeah, I think you know a thing or two about long-term care. Very important information right there. Final
He wrote
question.
a book, by the way.
He wrote a book, by the way. All right, we'll dive into that some other time.
Very interesting
Okay.
stuff,
It
yeah.
would take more than 15 seconds to get the answers in about how powerful that can be, but great stuff. Final question of 15 and 15. David, this one has gained a lot of steam. It is cryptocurrency. What is your advice for people that want to put all of their retirement savings into it?
Come talk to us first. Firstly, I'll start
Okay.
there. People are very excited about cryptocurrency. The thing that they understand, it's also very volatile. So if you have some portion of your money earmarked for cryptocurrency, that might be okay. But let's first make sure your needs are met.
All right, some fun money. Doesn't hurt to throw some fun money at it, but yes.
The wild west of investments.
Okay.
Sure is.
There it is. High risk, maybe high reward. We'll have to wait and see on that. Gentlemen,
High loss,
great
yeah.
information. Yeah, absolutely. Guess what? You're off the clock right now. Fantastic information from 15 and 15. Thanks so much for that. And right now, today exclusively for our Finance Report viewers, L3 Family Wealth Partners has a great offer for you. Right now, for the first 5 callers with a portfolio of $500,000 or greater, they're offering a complimentary, full-blown retirement plan just for you. This will allow their team to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call, 561-933-6877. That's 561-933-6877. As we close out the show, Mark, you mentioned you're a CFP. I want to dive deeper into that. A CFP versus a financial advisor. What are we looking at here?
Well, the financial advisory industry is comprised of a multitude of professionals, products, services. But when it comes to financial planning and really retirement planning, tax planning, and income planning, we feel that any advisor that holds a CFP designation is considered the gold standard.
Okay.
And it's not easy to get a certified financial planning designation. It's very similar to like the CPA exam. It takes about 2 years to prepare for, and you have to log in thousands of hours of professional experience. And the one thing that I would like to say, and I know I'm rambling a little bit,
No, you're great.
is that with the CFP, we not only have a ethical responsibility to always operate with honesty and with integrity, but we also have a fiduciary obligation
Okay.
to always act in the client's best interests.
Now, look, I appreciate you diving into exactly what that means. And for people in the financial services industry, for people seeking that type of help, it can certainly make a huge difference. I want to dive into y'all's process, the first meeting process. Dylan, let me start with you. What exactly takes place? What are you looking to accomplish?
So when someone comes into our offices for the first time, we really want to get to know the client, their family, and also their financial goals and objectives. But what it really comes down to is answering the question of what keeps you up at night.
So what exactly does it mean to have a retirement plan?
It means you have a roadmap that's going to guide you to having a successful retirement plan. Think about it like this. You get in the car, you're going on vacation, but you've never been there before.
Yeah.
And you don't have a GPS.
Yeah.
You're not going to know how to get there.
Now, you want the GPS. How often are people heading into retirement without that GPS and not really having a plan? Instead, they're relying on hope.
More people than you think. People come into our office all the time and they bring their monthly statements or
Okay.
their quarterly statements. And Dylan referred to this earlier today. They think that their statements are their retirement plan. And it's really sad. But the good news is, after spending some time with us, we show them what a real retirement plan should look like. And that usually motivates them to come back, and then they become our clients.
And a comprehensive financial plan really needs to include income planning, lifestyle, legacy, and tax management planning. If any of those 4 prongs are absent from the plan, it's not complete.
Yeah, understood. So let's dissect that right now. We're going to start with income planning. Why is income planning so critical for a successful retirement?
It's crucial. If we don't understand, firstly, our expenses, though, we're not going to know how much income we need for retirement. Every individual's situation is unique. So we need to understand their expenses, and then we need to show them how to have enough income to sustain their standards of living while they're in retirement.
Why is tax planning also so important to get to and through retirement?
Well, the bottom line is you can only spend what you keep. And the more money that goes to Uncle Sam, the less money goes towards your retirement.
No winners there, yeah.
Absolutely. So look, we live in the greatest country in the world. We have to pay our share of taxes.
Sure.
I get it. We just want to make sure that our clients don't pay 1 nickel more than they should.
Yeah, absolutely. Look, you're going to owe taxes, but don't pay him more than you legally have to, because guess what? The government, they're not sending you back a refund check when it comes to that. Overpaying in taxes obviously can be a big loss. When we're looking at market volatility, Dylan, what have you seen happen to people that don't reduce their risk level as they approach retirement?
So let me give you a story.
Okay.
We've got a wonderful couple. They're now clients, but when we first met them, it was November of 2021. They had a retirement date scheduled for March 31st, 2022. At the time when we created the plan, we had showed them a way to generate enough income to cover the expenses for both of their lifetimes.
All right.
But we were in the peak of a rally, so instead of taking our advice right away, they decided to delay the plan and hope for more growth. What happened? First quarter of 2022, their portfolio dropped 25%.
Say that number again.
25%, David.
They can change your retirement.
You know what that means? Their income that they could potentially generate dropped as well.
Now, they did get lucky.
Oh,
The
yeah.
market did have a rally.
Yes.
After that, recently, we were able to bring the clients back in. They now accepted our recommendations. We reallocated their assets towards more safe type programs, generating the income that they need, and now they're set. Since then, the market's gone down again, and now they're happy.
Well, that's a question I'd like to touch on real quick before we close out the show officially. It's, you know, the market historically comes back, but if you don't put time on your side, how can that impact and change the outlook of your retirement?
Absolutely. Look, my 2 sons, if the market goes down, they don't have to worry. They're
Sure.
buying more.
Yeah.
Someone like myself, an old fogey, I have to start
Your
work.
words, not theirs, not mine
say
right
it.
there.
But I do have to start thinking differently now, because retirement's a lot closer to me than it is to them. So I'm much more conservative than I've ever been. And I practice what I preach.
Sure. Yeah, absolutely. Because again, if your plan looks like it did when you were 30 or 40 years old and now you're on the verge of retirement, things could go south very, very quickly. Gentlemen, very important information today. And I know to help our viewers at home, Mark, you have a very special offer.
That I do. So for the first 5 callers that have saved $500,000 or more for retirement, we like to invite them into our office where we'll sit down with them personally and help them create their very own retirement plan. And David, we're going to do that on a complimentary basis.
A very generous offer. Mark, Dylan, David, thank you so much for your time and the great insight. We certainly do appreciate it. So for you at home, if you want to learn more about getting to and through retirement, L3 Family Wealth Partners has a great offer for you. Right now, for the first 5 callers with a portfolio of $500,000 or greater, they're offering a complimentary, full-blown retirement plan just for you. This will allow their team to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps to really get ready for a successful retirement, a game plan to get you where you need to be. The number to call, 561-933-6877. That's 561-933-6877. For all of us at the Finance Report, thanks for watching, and we'll catch you back here next time.